Today I am going to discuss about Ind AS 10 relating to events after the reporting period. So generally these are the events which are occurring during the subsequent period, that means after the financial period date. And this is one of the interesting chapter because many people they always get confused or try to understand that which are the activities which is occurring after the balance sheet date, but still you need to go and update the financial statement. So let's start. Topics what I'm going to cover in this session are meaning of subsequent period. We'll try to understand which period is called as subsequent period. Second, how to identify adjusting and non-adjusting events. That means how do you classify which items to be adjusted or which are not to be adjusted. Going concern impact on financials. So if there is a going concern impact after the balance sheet date, then whether we need to adjust that, we'll understand that. Treatment of dividend declared after reporting period. And last, examples relating to events after balance sheet date so that you have more clarity. Let's try to understand what is the meaning of subsequent period. And for that, we need to understand the flow of financial statement and the approval of the financial statement. So once the financial statement is prepared by the finance team, that will be subject to audit, right? So statutory auditor are the auditors who will be auditing the financial statement to provide their view on the financial statement. So let's take an example. The financial statement is prepared as on 31st March and the auditor is completing the audit by 30th of April. Once the audit is completed, the auditor will issue the audit report and then the financial is adopted by the board of directors. Okay. And once the financial statement is adopted by the board of directors, the same will be approved in AGM where the shareholders will look into the financial statements and approve the financial statements. And later the same data will be uploaded to Ministry of Corporate Affairs. Now let's take an example here. 31st March is the date when the financial statement was prepared. 30th April is the date when the audit was completed. 5th of May is the date when the board approved the financials. Okay. Now question is, which period is called as subsequent period here? So the period from 31st March, that is the date of balance sheet, till it is approved by the board on 5th of May. This period is called as subsequent period. Now let's try to understand what is the meaning of events after the balance sheet date. So significant events, that means material events which can influence the economic decision of the user of the financial statement. That means the event should be having an high impact so that it can change the decision of the user. Okay, so that's the meaning of significant events. Now coming to events after the balance sheet date, these are significant events that could be favorable or unfavorable which occur between the balance sheet date and financial statements approval date. Okay, so this is the events which is occurring between the balance sheet date or the financial statement date and the approval date, that is the date on which the board is approving. Okay, now events occur after the balance sheet date are classified into two types, that is adjusting events. Okay, we'll understand more what is the meaning of that. And second is non-adjusting event. Okay, now events occurring after the balance sheet date, as we explained in the previous line, there are two types. One is adjusting event and the second is non-adjusting event. Now what is an adjusting event? Let's understand that. Conditions exist on the balance sheet date. That means if you're preparing the balance sheet on 31st March, there is a condition attached to a particular event and that condition is helping you to take certain action or certain accounting treatment, right? Next, events occurring after the balance sheet date provide additional information about the condition existing on the balance sheet date. That means the condition which was there on 31st March 2024, for example, you're preparing the balance sheet on 2024 31st March, that condition is changing or the condition is based on certain information and there is some additional information on the condition. Okay. Third, the additional information materially affects the amount on the balance sheet date. That means whatever information you are getting now after the balance sheet date, that could change the condition and the numbers could be impacted. Hence, these are all adjusting events. Now, what you will do if such situation is there in adjusting events, you have to adjust the financial statement. Okay, there is no choice. You have to open the P&L and balance sheet and adjust the entries. Coming to non-adjusting events, no condition exists on balance sheet date. Okay, there is no condition on balance sheet date. That means on 31st March 2024, if you're preparing the financials, if there is no condition on that day, okay, then subsequent events don't affect amount on the balance sheet date, because whatever is happening is subsequent to the balance sheet date. Okay, because there is no condition, then you need not adjust the balance sheet. However, if the amount is quite high and it could impact the shareholders decision, then it is suggested that you have to disclose this in the financial statement as part of the notes of accounts. You need not adjust the profit and loss account or the balance sheet, but you need to adjust the notes to accounts. Let's go through one example to understand more about adjusting and non-adjusting event. While preparing the financial statement for the year ended 31st March 2024, X Limited made a provision for doubtful debts at the rate of 5% on accounts receivable balance. In February 2024, a debtor for rupees 2 lakhs had suffered heavy loss due to earthquake. The loss of debtor was not covered by any insurance policy. Considering the event of earthquake, the company made a provision at the rate of 50% of the amount receivable from the debtor, apart from general provision of 5% on remaining debtors. In April 2024, the same debtor became insolvent. Financial statements are approved on 31st August 2024. Discuss the accounting treatment as per Ind AS 10. Okay. So it is very clear in the question that in February 2024, a debtor of rupees 2 lakh had suffered heavy loss due to earthquake. Okay. And the company's general policy is that they take 5% provision for doubtful debt for all customers. But in this case, as they know that there is an earthquake, they have taken additional provision of 50%. Okay. But what is happening after the balance sheet date, that is 31st March 2024, the company is coming to know that the debtor became insolvent. Now question is whether you should go and adjust the balance sheet or you still continue with the 50% provision. On 31st March 2024, the financial position of the debtor was not good and such condition existed on the balance sheet date. So you can see here there is a condition which was attached to the account receivable, right? That is the amount pending from the debtors. The entity may or may not be sure of the position of the debtor on the balance sheet date. The subsequent event of insolvency is confirming the financial position of the debtor as on balance sheet date. So what is happening? It is an adjusting event and it requires an adjustment to accounts receivable balance by way of making allowances for doubtful debts for the entire 2 lakh rupees, because the condition was there and based on the condition you have taken 50% provision. Now that condition has changed, correct, enhanced, and you know that you will be not getting any amount now, so you have to go and take the provision for 2 lakhs. So the 5% provision may be as part of the accounting policy of the company, and the above provision should be made in addition to the existing provision. Now let's take another example. Continue with the previous question. So what we understood in the previous slide. The accounts receivable balance is rupees 2 lakh as on 31st March 2024, but earthquake took place in April 2024 and the debtor filed insolvency petition in May 2024. Discuss the accounting treatment as per Ind AS 10. So here what is happening? The earthquake is happening after 31st March 2024, right? That is very important to know. So the debtor's financial position was good as on 31st March 2024 and the subsequent conditions are entirely different from the conditions existing as on balance sheet date. Because on balance sheet date, there was no question of insolvency, there was no earthquake. That is, no such condition exists on balance sheet date. Hence, it is a non-adjusting event and it doesn't require any adjustment to financial statement as on 31st March 2024. X Limited should provide for doubtful debt during the next financial year, that is 24-25. Okay. If the amount involved is material to the entity, it should disclose the same in the financial statement. As we have understood in the previous slide, that non-adjusting events, if it is highly material, then you can disclose in notes to accounts. Now let's come to the third question. Continue with the previous question. There was no balance of accounts receivable as on 31st March 2024. That means balance receivable is 0. X Limited sold goods in April 2024. Earthquake took place in May 2024 and the debtor became insolvent in July 2024. Discuss the accounting treatment as per Ind AS 10. So here it is very clear. Everything is happening after the balance sheet date, right? It is a non-adjusting event as there was no balance and condition exists on balance sheet date and doesn't require any adjustment to financial statement as on 31st March 2024. X Limited should provide for provision for doubtful debt during financial year 24-25. Take another example. ABC Limited is in the legal suit with the GST department. Company gets a court order in its favor on 15th April 2024, which resulted into reducing the GST liability as on 31st March 2024. The management has not considered the effect of the transaction as the event is favorable to the company. Company's view is favorable events after the reporting date should not be considered as it would hamper the realization concept of accounting comment in the light of Ind AS 10. So it is very clear. As per Ind AS 10, events occurring after the balance sheet are significant events, favorable or unfavorable, which occur between the balance sheet date and financial statement approval date. So here the point you have to keep in mind is favorable or unfavorable. It can be positive impact or it can be a negative impact. In the given situation, the subsequent court order is an adjusting event and it is favorable to the entity. All adjusting event, either favorable or unfavorable, should be considered. Hence, the company's opinion is not in line of Ind AS 10. That means if you are getting a favorable order and that favorable order is changing the GST liability for you, then you have to change the liability which you reported as on 31st March. You can't show a higher liability that time. And subsequently, there is a change happening and you can't reduce the liability subsequently. You have to reduce the liability as on 31st March. Understand about going concern and dividend declaration. What impact these two have on the financial statement? So going concern means what? If events occurring after the balance sheet date affect the going concern assumption of the entity, it should consider such events as adjusting events and prepare the financial statement as if there is no going concern assumption, that is liquidation or NRV basis. That means if some event is occurring after the balance sheet date and that event gives a question mark on the going concern, that means the company may not continue, then in that case you have to prepare the financial statement on NRV basis, that is mostly on the fair value basis, because you are not going to continue the business. Now in case of dividend, if dividends are declared after the reporting period but before the financial statements are approved for issue, the dividends are not recognized as liability at the end of the reporting period because no obligation exists at that time. Such dividends are disclosed in the notes to accounts. That means any dividend declared after the financial statement date, it need not be adjusted with the financial statement numbers. So let's quickly take one example. After 31st March 2024, there was a severe earthquake. The company lost its building and major plant and extent of loss is beyond repair. The company doesn't have adequate fund to repair or replace the same. Discuss your views based on Ind AS 10. Okay, so it is very clear. The subsequent event of earthquake occurred after balance sheet and no condition existed on balance sheet date. So it is very clear that there is no condition. It is a non-adjusting event. Even though the above event occurred after balance sheet, the event materially affects the solvency of the company and it indicates that going concern assumption is not appropriate to the entity. Even though it is not adjusting event, as it is affecting the going concern assumption, it should be treated as adjusting event and the company has to prepare the financial statement as on 31st March 2024 on NRV basis. So it is very clear. If there is question mark on the going concern, there is no choice. By default, it is an adjusting event and you have to restate your financial statement as per the NRV basis, that is net realizable value, what you will be realizing by selling the assets of the company. Take few more examples to understand more about events which needs to be adjusted with the financial statement. Explain the treatment of events occurring after the balance sheet date in the following cases as per Ind AS 10. First one, a major fire has damaged the assets of a factory on 4th April 2024. The loss is estimated at rupees 10 crores, out of which rupees 6 crores is recovered from the insurance. Second one, the management of the company has agreed to increase the gratuity and This may lead to future annual increase of provision by rupees 2 lakhs. Third, the dispute for retirement benefits to employees was before the arbitrator, and he gave the award in favor of the workmen for rupees 3 lakhs. Okay. So let's go one by one. Coming to the first one, a major fire has damaged the assets of the factory on 4th April 2024. The loss is estimated at 10 crores, out of which 6 crore is recoverable from the insurers. So there is a net loss of rupees 4 crores for the company. Correct. Therefore, the management has to decide whether this loss is material enough to affect the going concern assumption of the entity. If it is material, the financials have to be prepared on NRV basis. Otherwise, a disclosure in the financial statement would be sufficient. So it always need to be checked that whether the going concern is the question what the concern the management has to look into it. If there is no going concern impact, then definitely it is fine. But if there is a going concern impact, then you have to restate your financials. Next one, the management of the company has agreed to increase the gratuity, and this may lead to future annual increase of provision of 2 lakhs. So here, as this decision is not affect the position of the asset and liabilities as on balance sheet date, a disclosure in the notes to accounts regarding the fact of the decision along with the financial effect would be sufficient. This is equal to, like, for example, there are few assumptions you use for valuation, like for example, employee attrition rate or discount rates. So this will change every year. Now, because during your subsequent period, if there is a change in discount rate or you feel that you give higher amount of gratuity, that will not change the condition as on balance sheet date. Hence, there will be no correction to that. Coming to the last one, the dispute for retirement benefit to employees was before the arbitrator, and he gave the award in favor of workmen for rupees 3 lakh. So the dispute was existing as on balance sheet date, and the award of rupees 3 lakh in favor of the employees gives additional evidence of condition existing on balance sheet date, because it was not clear, right, on balance sheet date whether the company is going to pay 3 lakh or not. Now that condition has been cleared, okay, before approval of the financials. Therefore, it is necessary to adjust to the balance sheet to the assets and liabilities by way of provision. So that's it from my side. Any questions or anything you want to have more clarity, please write in the comments. Please share this presentation video with your colleagues and friends so that they also understand more about events occurring after the balance sheet date, how this needs to be adjusted and how it has to be shown in the financial statement. Thank you.